Good morning, everybody. It's Friday, July 7th, 5:28 a.m. Central Time. Grain market's a little bit lower here this morning. Matt Bennett, Mackenzie, good morning. Let's start off with the drought monitor, guys.
So, USDA released weekly drought monitor data yesterday. Heavy rainfall across parts of the Corn Belt led to improved drought conditions this week. Southeast Nebraska, southern Iowa, northern Missouri, central Illinois, southern Indiana, parts of Ohio, and central and eastern Kentucky saw improvements. Dry weather in the northern part of the Corn Belt caused worsening conditions in parts of Michigan, Wisconsin, and Minnesota. Much of the Great Plains saw widespread precipitation except for eastern Kansas, northern North Dakota, and western Colorado. So, if we look at the percentage of U.S. areas experiencing drought, 67% of corn country is in some level of drought, soybeans 60%, winter wheat 54%, spring wheat 19%, and cattle country 41%.
In terms of corn and soybean areas experiencing a drought, this is the first time that we've seen declining numbers in terms of the percentage area since the middle part of May. Matt, I'll ask you this question. That drought monitor still doesn't look good, but this corn chart that I've got on my screen looks really bad. So, what exactly are we trading here? Are we trading the idea that we're going to continue to see improvement?
Yeah, I mean, to me, the trade essentially is about shoring up what looked like a really horrible developing condition, if you will.
Mm-hmm.
Going into pollination, excessively dry, and so as you know, Joe, we sat here throughout the whole month of June. 10 days out. We're 10 days from a rain. And the market just really by that time really didn't want to believe that we were actually going to get all that rain. In Illinois, you saw some of the maps and said, you know what, the 6 to 10 day forecast, you're going to get 4 inches of rain. And I'm sitting here thinking, sure, yeah, we're going to break out of a drought with 4 inches of rain, because typically it's pretty tough to do something like that. And I think that the market, obviously raced up, pushing 630. Now you're in a situation where you actually do get the rain. Yes, I know not everyone got the rain, but what it did was it signified to the trade that the drought's not going to be near as bad as what they thought it might have been. And in my opinion, that's exactly why the corn chart looks the way it does.
Let me ask you this question very simply. If I would have shown you this drought monitor, say back in like March, I said, Matt, this is what the drought monitor is going to look like on the 4th of July. Would you have guessed that corn prices would be trading on and off below $5?
No, I would have said, push it up a dollar, anyway. I mean, bottom line is, anytime you get that kind of drought conditions going in July 4th, you should have a pretty hot trade. It's pretty hard to keep the corn market down in a trade like that. And I guess there's no question that demand has played its role in this particular trade. We know that there's a lot of folks that are sitting here looking at this thinking, what we could have a 2.5 billion bushel carry or something like that. It's certainly possible depending on what the yield might look like. But at this stage, obviously this crop has been hurt to an extent. And so to what extent, I think remains to be seen, but gone out the window or the 2012 type yields. I think that was part of the reason the market really raced, even in the face of exports being essentially absent during that
Yeah.
rally. Exports demand in whole was not great, but the market kept going higher. And the reason why it did is because people were talking 2012 type stuff.
Yeah, and that's probably off the table in terms of the yield number. Nobody
Yeah.
knows. USDA is going to give us an update next week. We're going to get to that in a second. Let's jump to current and future weather prospects.
Rains are falling over the Nebraska South Dakota border this morning. An additional system sits over the Kansas Oklahoma border. Corn Belt rains will be mostly sparse over the next 5 days, although this morning's 10-day Euro model is decidedly wetter compared to yesterday. More rain and better coverage are offered for the central U.S. Corn Belt. A great deal of the expected accumulation, however, occurs during the back half of the 10-day period. The GFS model is also wet.
Yeah, so this Euro map in particular is drastically wetter this morning than it was at this same time yesterday. for Illinois, for Indiana, for Iowa in particular. You've absolutely got some model divergence between the Euro and the GFS. And you saw some flip flop yesterday. We actually rallied corn yesterday because the middays looked a little bit drier, and now we're back wetter here this morning. So, Matt, we keep seeing these like weather model flip flops, but I think the idea here is that like you're shifting toward a more normal rainfall setup rather than like a drought rainfall setup.
Yeah, it sure looks like that to me. I mean, it was Iowa in the Dakotas to me, and Minnesota looked pretty dry.
Yeah.
And I think that the trade's taking a look and saying, "Holy smokes, you could be looking at a fair amount of bushels, a fair amount of production impacted here." But yeah, these models continue to diverge. But what we've seen is that we've actually seen some rain come through, and we all know that rain begets rain.
Yeah.
So whenever you finally get a rain, you get a little bit of moisture in the atmosphere. It gives you the opportunity that maybe the thing's going to spread around just a little bit. So yeah, I still think the trade feels a lot more comfortable. We're going to have decent production. They understand we're not going to see a 181. I think everybody knows that's out the window too. But at the same time, you should have at least a respectable number. Whenever some of this corn actually held on, looked awfully good, waited on the rain, and I've got to think that as good as some of these genetics are, there will be some really good corn this year. I know some people are going to get irritated with me saying that, but let's just be
Yes,
honest.
they
That's the
will.
way it's going to be.
They will get irritated. Hey guys, I do a pre-open weather video on Sunday nights for the premium crowd. So if you are not signed up for the premium service, go to standardgrain.com this morning. Weather's going to be a big deal Sunday night into Monday, as it always is in June and July. Another video you may be interested in is this one I did yesterday. Corn and soybean acres. What happens in regard to corn and soybean acres historically or typically from the June number to the final number? We had some good charts, statistics, all that stuff. If you want to see the videos, you want to see the morning emails, guys, go to standardgrain.com, $50 a month. Sign up this morning, check it out. We've got a report next week.
Yep, USDA will release its monthly crop production and WASDE report on Wednesday next week. USDA has not adjusted its corn and soybean yield estimates in the July report in recent years. Some might argue, however, that downward yield revisions are necessary given the poor crop ratings. USDA will incorporate the June 30th corn and soybean acreage numbers into their new crop U.S. balance sheets.
Okay, so when we say some people might argue that they should lower the yield, by some people, I mean like almost everybody, but that has not been USDA's MO in recent years. Matt, do you see a good enough reason for lower yield numbers next week?
51% good to excellence, as low as we've seen in several years. And so, yeah, I think that they're going to lower. I mean, 181.5 is achievable. 181.5 though takes a lot of things falling into place at the same time. We've got the genetics, but Mother Nature is going to have to cooperate a little bit better than what we've seen this year. So, in my personal opinion, I'd say there's like an 85% chance that they change the yield. It goes lower by a decent margin. I think you could go down 4 bushel, maybe 4.5. I believe that our official estimate, Joe, is 176.5.
Mm-hmm.
There was people on our team that thought it would go lower, and I said it's probably lower. I think the trade is trading something lower, but I don't think the USDA is going to take that big of a chunk all in one swoop. So I do think they're going to come lower, and I think it'll be a decent amount.
2012, you saw the real big drop in the August report, and that actually marked the high of the market. Not that this is 2012, it's not going to be. But yeah, if USDA does stick with those trend yield numbers, guys, it's not, I don't think it's USDA committing to trend yields. It's more USDA just following methodology and saying, well, given what we currently do here, we don't know enough to make those downward adjustments. And if they do make them, I'd venture to say that, yeah, they kind of slow play it. They're not going to take 10 bushels off the corn yield in one report. I don't think, but you never know. You never know with USDA these days. Ethanol production.
Yes, U.S. ethanol production increased marginally week over week. Weekly output of 1.06 million barrels was up marginally compared to last week and the same week last year. Ethanol stocks were pegged at 22.26 million barrels. The print was down 3.1% on the week and down 2.1% compared to the same week last year. Implied gasoline demand increased 3.1% compared to last week and was up 7.6% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 4.9% versus the same period last year.
Mackenzie, you had some stuff in this morning's email about ethanol production margins. What are we seeing there?
They have tacked on about 40 cents in the past 2 weeks. We've seen them climb here over the past couple weeks.
So that is a direct result, of course, of drastically lower corn prices. This is good. This is a good print relative to what we've seen. I still don't know that we hit USDA's target. Matt, what are you seeing on the cash side in the corn market?
The cash side actually didn't impress the last couple of weeks
No.
on a downward turn, which is not what you want to see. But here this week, we're actually seeing basis improve a little bit, and I think
Yeah.
it goes to show you margins improving. Some of these guys and gals are sitting here saying, "Well, we're going to go ahead and chase a little bit of this corn before it gets too late in the game." There's going to be that uncomfortable time, probably between sometime here soon and harvest, where some bushels are going to get chased around. Let's face it, but I agree. This is a pretty good development that we've seen. I mean, we've been pushing 106 million bushels 3 weeks in a row. Are we going to hit USDA goal? Probably not. But we're not going to miss it as far as what I once thought we might, and that's a pretty good sign.
How much old crop corn is still sitting on the farm, if you had to guess? And what does it take in terms of either the calendar or price to get it moved?
Now that's a great question. I think the thing is, of course, it's going to be relative to basis.
Yeah.
Depending on where you're at, there are still folks out there pushing for corn. It's interesting. The river really got kind of hot yesterday. A lot of times, whenever you get into wheat harvest and you're competing a little bit with wheat moving down the river, which there's not a ton of it that happens, but sometimes you'll see the basis kind of heat up a little bit, and that's exactly what we've seen. So I do think that a producer needs to pay close attention, though, because anytime that you get the basis to warm up just a little bit, you got to be cautious as to think that it's just going to continue to go in that direction, especially this time of year, because sometimes you just get the rug absolutely pulled out from under you.
Let's take a quick look at the southern hemisphere here.
The chances of a very strong El Nino in Argentina have been reduced. A month ago, it was predicted that Argentina might be facing one of the most intense El Nino weather patterns in 60 years, but according to the Rosario Stock Exchange, that is no longer the case. A historic drought has plagued the country during the 2022-2023 season. El Nino, of course, is good news as it will bring increased precipitation to the country. However, enormous amounts of rainfall associated with a very strong El Nino weather pattern would make it more difficult to plant soybeans and corn later on this year.
So, what you'd like to see in Argentina, if you're a farmer, is not a super El Nino, as they discuss here in this Reuters piece. You'd like to see an El Nino, I guess. We're in the dry season right now as it relates to Argentina corn and soybean country. Dry season's like May through September, and then the wet season is like October through April. And the problem last year, of course, the reason they had a crop disaster was because it didn't rain during the wet season. So they're anticipating, I think, hoping that they bounce back this year.
Absolutely. And Joe, I thought all we had was La Nina and El Nino. Now you got to throw super El Nino in
Yeah.
there. I mean, what's that all about? I mean, the thing is that they were freaking dry as could be.
Oh, yeah.
And that's a part of what this trade, was thinking is that, you know what? Everyone kept thinking Argentina's finally going to catch some rain. What if that's the U.S. this year? What if the U.S., you continue to see these forecasts? Hey, we're going to get rain here around the corner. Yeah. And then you just never do. What would that have done? And obviously I think you could have tacked another dollar on the corn market pretty quickly if we wouldn't have gotten that rain that went through Illinois just a week ago. So I don't know. I sure hope that they heal up from it for their benefit. But you know what? A producer better pay close attention, because if Brazil has the kind of bean crop they had last year and Argentina produces one as well, it could change that balance sheet rather quickly.
Yeah, I mean, Argentina was a big part of the reason that soybeans saw that rally, like fall, winter into the early part of this year. I mean, they lost 25 million metric tons off of what would have been a normal crop,
Huge.
which is a big chunk of change on the global balance sheet. So if they recover this year, they get back to a 50 million crop in beans. That's it's not the most bullish news in the entire world.
Nope.
Let's jump to the economy, which is still very good, apparently.
The U.S. job market remains strong. Private sector jobs spiked by 497,000 in June. the biggest monthly increase since July of 2022. Annual pay rose at a 6.4% rate, extending a declining trend, but still a sign of developing inflationary pressures. Leisure and hospitality added the most jobs, followed by construction, transportation, and utilities. Experts believe there are still nearly 2 open positions for every available worker. The non-farm payrolls report will be released today and is expected to show an increase of 240,000 jobs after a 339,000 gain in May.
Unemployment is expected to decline this morning, 3.6% expected, 3.7 was the May print. It's very hard to have a recession when you have a 3.6% unemployment rate. Matt, there was a time, 2022 through maybe like the first part of this year when I think a lot of people, myself included, were worried that a recession would hurt the grain markets, hurt commodity markets. I kind of feel like that sort of idea is off the table, at least for the moment.
Yeah, I mean, I would agree. And I don't know, whenever you guys were talking about jobs, one thing that probably comes to mind for me that some producers aren't going to like to hear is that you're probably going to be looking at and maybe another rate increase. I think that it's going to be hard for you to stay status quo or keep these guys from going down, if you will, which I know a few people are hopeful there. But you know what? High interest rates are probably here to stay. But I'm with you. This would be a weird recession if we had it. There's so many different things going on here. But I was with you. I really thought that it could be hard on commodity markets, but at this stage of the game, I don't think that necessarily is going to be the case. I think we're talking a different set of circumstances what we were then.
The stock market did not like those good numbers yesterday. It's a good news is bad news type deal, because when you get this super positive economic news, it means the Fed's going to hike and they've got more room to hike. And I think treasury markets are like 90% chance you see a hike later this month. So that's the deal. Cattle market was a little bit lower yesterday.
Yeah, cattle futures continued to adjust lower on Thursday. Feeder cattle futures closed an average of 232 lower. Live cattle futures were down an average of 39 cents lower, pressured by a seasonal drop in boxed beef prices. Cash cattle trade has been slow once again this week. In Kansas and Texas, trade was reported at 178, which is steady with last week. In the Western Corn Belt, compared to last week, live purchases traded unevenly steady from 179 to 184. Choice box beef ended the day on Thursday at 319.87. That was down 291. Select ended the day at 289.97. That was down 272.
Matthew, are you still a cattle bull?
Yeah, I'm still a cattle bull. I don't know if it's right now. I just think that, when Kinsey talks about the Western Corn Belt, and when she talks, she's been getting freaking rain all summer, and then you take the people in Kansas, they're getting rain down in Oklahoma. What's that mean that's going to happen? Same thing I've been talking about. And people that have heard me talk about it are probably like, will you not say it? But I'm going to say it. They're going to retain heifers. And when they retain heifers, you're going to see cattle on feed numbers dip even more. And I'll tell you what, if demand doesn't change from what we currently see, and it could, let's face it, interest rates keep going up. It's going to change some folks' mentality at some point. There's no question. But I got to think that you're going to see some $200 fats in our future. I think it's going to happen.
Mackenzie, you're in the Western Corn Belt. Matt is not in the Western Corn Belt. Do you agree with his analysis here?
Yes, I most definitely do. I think we're already starting to see people retain bred females. If you look at prices of pairs and what I know people are doing with their heifer calves and what everyone is breeding, people are starting to retain heifers. We have a lot of moisture out here. You look at Nebraska, South Dakota, North Dakota, Wyoming, Montana. There's a lot of heifers that are gonna get kept back.
All right, we're all on the same page. I don't know if that's good or bad, but that's the deal. Outside markets this morning, guys. U.S. dollar is off just a little bit. Stocks are off just a little bit. Gold's up $8. Crude oil is up 23 cents in the August WTI at 72.03 last trade. Everybody have a wonderful weekend. I will talk to you Monday. Thanks, guys.
Yep, thanks.